So you know it's a we did it. Look, thank you all very much. And I wanted to turn for a moment and build on something that was mentioned in the earlier panel, which is this focus on development. Conscious that all of us up here represent U.S. perspectives from large multinational corporations. But one of the things that has happened over the past 2 years is that these discussions have attracted a great deal of support from developing countries who see commitments in this area as essential to their growth, their development, their support for small businesses. We're always thankful for the leadership of countries like the United States and Australia, but I've been honored to work with countries including Costa Rica, Uruguay, Colombia, Nigeria, Benin, and to hear them talk about their development interests in being part of this initiative. With due respect to Anupam, who is terrific, and you should all go buy his book, which I had a chance to review at some point a long time ago. I do see development as just a fundamental goal of these negotiations, and it's been nice to see Nigeria, Costa Rica, Uruguay, and ASEAN countries sort of articulate the fact that just being part of these negotiations and the commitments that could come from them will help their developments. One of the things that we've had a chance to do through our Global Innovation Forum is we've written a report on enabling women entrepreneurs through global e-commerce in ASEAN. And so to talk with some of these women and hear them unpack the technologies that they use to go global. A woman in the Philippines who developed a fashion line sells to major retailers in the United States and direct to consumers around the world. She uses Shopify, PayPal, Dropbox, Google Suite, local technologies to enable cash on delivery. And without those technologies, she doesn't have a global business. And so, whether you're a large company in the United States or a small company in a developing country, there's kind of a partnership element to what we're talking about here. And so wanted to see if I could ask any or all of you to talk about the potential of companies like yours to be a partner to improve development outcomes or enable small businesses in developing countries in particular.
I've got just a couple thoughts on some of the technologies that do help our customers around the world, large and small. For our customers, whether you're in the mining or construction or rail business, time is money and downtime is even more costly. So having that predictability of your machines, not being able to order a part on that app, on the job site or away from the job site, and having it in real time when you need it delivered. Connecting your entire fleets, say you're operating several mines in several locations or several job sites, and we're able to have that entire fleet of machines connected, talking to each other, talking to you, talking to the operators of machines at the same time. We not only can connect CAT machines within your fleet, but across your fleet, regardless of the manufacturer. And that is a huge, huge bonus to our customers, especially in remote areas. And then lastly, folks don't know this, huge on safety. Uber and Lyft and everybody's talking about, remote autonomous vehicles, driverless cars. We launched our first driverless autonomous truck in 1996. We've been in this business for a long time. And it improves productivity, and that it hugely increases safety, especially in remote locations around the world. So just a few of the technologies that, again, all require these digital services. Thanks, Chander.
Just a couple of points on my side. One of them is, prior to looking sort of the role of Walmart, I wanted to use the example of Walmart. And we're a big U.S. company, but we were not a digital company. And that was one of the big points that I wanted to make. I was laughing Sam Walton's mantra, which was basically the strategy of the company, which just pile it high and let it fly. People come into the store and they buy the stuff, and then that's just the model. But what we had to do to compete is to have all of this digitally enabled enhancements to really provide for the customer. And we didn't do it all ourselves. There's some things that are very close to retail or the retail experience that we've built out on our own. But I mentioned that hub in ATX or in Austin, where we are using cloud data to provide insights about the stores. That's a partnership with Microsoft. And there's a myriad of other examples of outside source. I know we use WebEx, outside source technologies that have helped us become more competitive. And so that's what I would say is the promise of sort of building out a roadmap of these agreements, is that you provide this whole menu of services that companies can take advantage of. And just real quickly on the other side of it, with say a seller, you know, that's where I think we really are behind the idea of sort of digital physical enablement, because I think that's where you can build sort of this inclusive growth and exponential growth. You can use the e-commerce to get global access around the world, but then use a store to start producing at scale, getting direct feedback from the customer on what delights them, what doesn't. What does the store manager think about your product labeling, so on and so forth. So when you put those things together, you can really, really grow the potential of companies. And so, and with that digital physical connection as well, you're thinking about the unbanked, the unwired. We've got a big project in Mexico where they've realized a lot of their customers don't have bank accounts. So now we have a system where they can have access to the online assortment, but pay in cash in the store, upload it onto the Walmart app, and then use that for not only paying for those services, but even outside services as well. So if you start to think about it holistically and think about how digital is impacting the entirety of the economy, then there really is potential for development.
Couple things. It turns out that IP traffic growth is growing the fastest in the Middle East and Africa, as one would imagine, right? It's starting from a little base. And secondly, in the Asia Pacific. So you would think, you know, most of the growth would be here in the United States or in Europe, when in fact that's not the case. That this explosion of data is occurring in developing countries in particular. One thing that Katie mentioned that I thought I'd comment on was the idea of repair. You talked about, you know, being able to monitor a truck and then have data come down, talk about, do you need a spare part, do you need repair? I was thinking about this in Geneva last week, that in fact, as part of the negotiations, we should probably talk to some of the governments about including repair commitments in their services commitments under the digital trade negotiations, because networks go down, and it's vitally important that we're able to service them very quickly, because as you said, the more downtime there is, the more money you lose. So that's just a thought that we might throw on the table for some.
So I think there's I know I'm not sharing any deep insight here to suggest that the emerging markets is where the growth is. And so for us, that is a business opportunity, because as I mentioned, we are in the business of financial inclusion. So those populations are very much the populations that are at the core of our efforts for many years, and most importantly right now. And what we have done is to try to think about what are the mechanisms and tools we need to bring those populations, particularly from the informal economy to the formal economy. So we've worked very, very closely with micro and small enterprises in a number of countries to try to connect them to the global e-commerce ecosystem, to give them that platform and that access. But we've also made sure not to forget that, particularly in these economies, for these micro and small enterprises, brick and mortar is still as critical, if not more critical, than getting onto an e-commerce platform. And particularly in these economies where we're talking about the micro of micro enterprises, you know, women stitching clothes that they sell through a cardboard, lemonade stand, basically. How do we bring those people into the formal economy? And so we try to broaden their customer base. And so what that means is we have helped enable them to access those customers by taking in certain forms of payment that they would not have otherwise been able to accept before. We have been able to link those micro and small enterprises to global systems of credit to develop credit and get capital they would not have had access to before. We've done this in a number of countries. For example, in Singapore, we've worked with Ride, which is a ride-sharing app in Singapore, where we have actually partnered with Stripe, which is something we often do. We partner with fintech companies around the world. We partnered with Stripe to allow drivers to get their payments immediately. So when they drop off a passenger, within seconds, they're able to get that payment for that ride on their card. So they're not waiting for the end of the day or waiting even for 2 weeks for a settlement by the parent company to give them their salary. We've also worked with Branch in Africa to help small micro enterprises overcome the fact that they lack a credit history. One of the challenges in many of these economies is that there is no well-developed sense of a credit history. Some of that is starting to change, particularly with the arrival of mobile payments. But even with mobile payments, there's challenges associated with translating those mobile payments into actual cash or into a credit history. Working with Branch, we've been able to help develop a line of credit that is tied to a card associated with those mobile payments. So there are a number of ways in which I think the use of data not only facilitates, but actually is crucial to the development of micro and small enterprises around the world.
Well, and I guess I would just add too that that micro business doesn't need to be global to utilize global technologies. And so, even if you're just doing business locally, you're probably using WhatsApp to communicate internally with your team, with suppliers. You need a payments processor, and you need a logistics provider. And so global technology doesn't just benefit those businesses that are going global, it benefits those businesses that are the most local of local businesses. So I wanted to just ask one more question, and then we would open it up to questions from the audience. I wanted to build on this conversation that the first panel started, and that I think on privacy and data flows. For me, when I look at the recent submissions from the United States, from the EU, from Brazil, from others, there is kind of an articulation of the fact that data needs to flow and that privacy and other legitimate public interests need to be protected at the same time. I thought Josh put it pretty well this morning that the positions that have been caricatured in the public sphere do not accurately reflect what's going on the ground in the EU, US, and other places. I'm wondering, and Katie, you don't have to start by answering every one of these questions, but maybe Arun, if you wanted to start, just do you sense a narrowing of these kind of theological differences on privacy versus data flows, and is there a path forward in these negotiations?
So let me first say I think Josh was absolutely right this morning in his assessment and his characterization. I do think the elevation of some of these disagreements to theological status is just unhelpful. First, they're wrong. As you pointed out, they're caricatures. And so I think I'd sort of begin by challenging the premise a little bit. I think those of us that have dealt with the European regulation a long time, it's very easy for us to get caught up in this, oh, they love regulation and we don't, and kind of fall into that habit. But I think it's important to remember that while they may have a different approach and a different emphasis, at the end of the day, it could not be plainer that the United States is 110% committed to free data flows and is 110% committed to the protection of privacy and protecting personal information. Nothing could be more clear than that, than the actual USMCA provisions, which then have been replicated in the U.S. proposal for the WTO negotiations. And what I found interesting about the proposals, like you, Jake, I did see, notwithstanding this notion of theology, I did not see that theology reflected in the submissions. And in fact, I was surprised by the European submission and how non-explicit it was about some of these areas. And in fact, it was the U.S. submission, as I recall, it was the only submission, I think, that actually called for a commitment in this agreement to protect personal information. So that was the United States, the country that supposedly doesn't care about privacy and only cares about data flows. And we think that is absolutely critical because in our business, we can't operate without trust from our customer. We're handling their payments, so it matters a lot that this information is protected. And so recognizing that free data flows go hand in hand with that type of privacy protection, as we see in the USMCA provisions and the US proposal to the WTO, is, I think, critical, and I don't think is inconsistent with where the Europeans are coming from. And the Europeans themselves have articulated many times and are reflected in their agreements, their commitment to free data flows. Now, they also are equally committed to privacy, and there may be, we can talk about different definitions of privacy, what the scope of that is, and how you go about protecting privacy. But let's not get into and make this into a theological debate, because it's not only inaccurate, actually it is ultimately extremely harmful to the negotiations. It sets up this false dichotomy and a false conflict. And when we set it up that way, we actually, sometimes it has a way of becoming a self-fulfilling prophecy, and whereas in fact, I think there's an opportunity here to work with the Europeans to develop a high standard agreement that is equally committed to free data flows and protection of personal information.
Thank you. Does anyone else want to comment on that? All right, we'll open it up to questions now. There's a microphone coming. Raise your hand and please just identify yourself when you ask a question.
Hi there, Bill Watts from Ateneo. I had two questions actually. One's open-ended, one's closed-ended. So, in particular, what are the issues talked about, and particularly Visa and Walmart seem to talk about the issues of, or how the opportunities in payments, in particular, were in emerging markets. And I was just wondering what the biggest challenges are in kind of reaching into these markets because of, I don't know, is it regulation, is it issues around KYC? I guess KYC is my close-ended question. Is that one of the biggest issues? Or does it become an issue if you're, let's say, Walmart taking cash payments at your retail outlets, then maybe you don't need to know your counterpart, but how do you guys navigate getting into those markets, and what are the biggest issues? Thanks.
I'm not really ready to take the mic. I come from a trade background, so I'm really starting to get into the sort of the finance side of things. And I started to work with the organization that built out this Cashy app in Mexico. And what I would say is that what we have been relying on, I know that sort of the advances on, like, I can only speak generally, like sort of this fintech or financial technology things, like allowing us to try and test things and be able to see what works and see the benefits of it is really what's helpful for us. I mean, I'm sorry, I can't get too into sort of the regulatory minutia, but I do see it as an opportunity that we should be pursuing, because what results from that, if I can go back to the general, I have another example here that in Mexico, 47% of our e-commerce orders across the board are happening at kiosks in the store. And I have to think that that plays a part in it as well, is that we have people that just trust that facility, or for whatever reason, they know that they can bring their cash there and still have access to the assortment. And so it's really an area that we would love to see sort of pursued and opened up.
Well, we tend to be a licensed industry in most countries, so right off the bat, we have to overcome some of those challenges. Sometimes those include certain licensing requirements that are different from those in the United States, and sometimes they're different in a problematic way. It often takes extensive discussion with governments to work through the application process to get into the market. I think beyond that, there are areas where I think you have governments that view some companies as big players in the market and are like, well, you're big players and you seem to be making a lot of money. We should get a slice of that. And so we should have a company that does the same thing you do. And as a general matter, our response is usually like, amen, hallelujah, bring more people in. Like we are perfectly thrilled to have more companies in this space. As a general rule, when you're a payments processor, the more economic activity there is, that's a good thing. And we're happy to have that competition. But the key point is competition. And rarely, or I should say rarely, but I think the challenge becomes when governments want to replace existing market participants with an exclusive, either state-owned or even when it's not state-owned, state-backed entity that fulfills that function. So I think that's a particular challenge that we face. I think also there's, it's not so much KYC, I think that's, I'm not sure that's one of the bigger challenges we face, but sometimes it's, sometimes I think it's even, I know in my own conversations, explaining what we do and how that affects people in a very direct way. I think that's, and that's on us, and that's our job, right? Because it's not on them to know and understand intuitively what we do. We have to make that case, and I think that can be challenging because just getting a little bit into the nitty-gritty of how the payments process works. I mean, our customers are first and foremost are banks that issue cards to perhaps individuals and businesses, and so by virtue of that intermediation, it can seem to a number of governments that, oh, you're here to help big banks, and not even local banks. But in fact, we have to explain that a number of things we do are designed to help local banks achieve greater profitability. And in fact, by virtue of what we do, businesses can access the markets, can get the capital, and can be able to build their businesses through the products and services that we offer that help our customers do the things they need to do. So that story can be a bit of a challenge to tell.
So I would just add, I mean, I would put sort of challenges into 3 buckets based on some of the small businesses that we've spoken with. One is sort of broad policy issues. In Myanmar, you can't set up a bank account that has international ACH access, so you can't receive payments from the United States. There are specific regulatory issues, and so PayPal couldn't operate based on their existing business model in Argentina up until about 2 years ago. Then they went in and had a dialogue with the Argentine government, convinced them why they should change their regulations to allow PayPal to operate, and now Argentina is one of PayPal's fastest growing markets. And then there's also an element of company choice, whether it's because of the size of your company or your risk tolerance. Some companies are not international at all, only international in some fintech companies or financial services companies are only international in a couple of markets or don't, because of fraud or other considerations, have chosen not to go into particular markets. Maybe, can you come in?
I want to thank Arun, Carol Kokendorfer with Linkages. I was the audible gasp to say thank you for mentioning the word standards. It is the global language that makes these supply chains, digital or otherwise physical, actually move. I represent the largest private standards organization in the world. It's in 51 countries. I mention it because it's on the back of your cards. It's that strip, it's that chip. It's what's automating our warehouses. It's the physical movement of product that Walmart owns. It's that omni-channel product, and it's even running the tractors. So this whole notion of standards is very critical. And in the discussion of digital trade flows and the discussion of privacy, I would ask that as we talk about digital, that we reaffirm the whole notion of standards and those standards integrated in the existing agreements and how they needed to be built upon, whether in the financial sector with SWIFT, whether with the TBT, with the ISO standards for machines and systems, whether for safe products and food with SPS, that we reaffirm these agreements and codify them in an e-digital statement, because that's how this entire physical digital world operates. So that's really more of a statement than anything. Thank you.
Does anyone comment on that?
I mean, just a comment of what comes to mind when I think about that. It's, as we approach this topic of trade and digital, I wanted to go back to what were we all trying to achieve when we had all of these other trade agreements in the past, or what did we achieve? And one of it was to clear the path and create the right rules or the right standards in place so that we can bring about sort of unprecedented growth. And I think what makes this conversation a little bit harder is that we've already come so far in the previous trade agreements that now we're sort of turning it on its head, is how do we make sure that we protect that? And that's one of the things that sort of we watch when it comes to Walmart, is how do we make sure that what we're doing is the right thing? It's right for the customer, it's right for the country, and so on and so forth, but it's the right standards, that we don't end up with a bit of fragmentation all over the board when everybody's really going after the same thing. So I support that.
I support that idea in one sense. I'm a little uncomfortable with the idea of codifying particular standards.
No, just,
Right.
make them voluntary in the private sector.
Exactly.
But
So-
make them, for example, with ISO being respected for mechanical systems, or with SWIFT for the banking code, make sure that they're available to be used.
Yeah, so
and
something
respected.
that's not too prescriptive, I think, could make a lot of sense. We'd have to, build that out and see how that would fit in.
Yeah, and I think building on that, it's just having some consistency around the world is what we're looking for. Some regulations that we all understand can all meet and all comply with, but not overly prescriptive, and just allows us to continue to build on what the good we're already doing. Thanks.
We have time for one more question. Or if we've exhausted everyone, then why don't you join me in thanking the panel, and I'm going to turn it back over to you.